Hi, this is Alan Gassman. I'm here with Brandon Ketron and Kevin Cameron, and we are celebrating for tens of thousands of PPP borrowers, and maybe more important for Kevin and their CPAs, because the Senate passed the House bill, and there's a lot more time to go ahead and get these PPP loans forgiven. I apologize that this says 11:30 to noon, 45 minutes. That just shows you how we bill people for half an hour of time. This is actually a 1.5 hour webinar, and you are one of the 500 people that were allowed on. Unfortunately, we had 1,700 sign up, so a lot of people will be watching the video, and we hope that this is very worthwhile for you. Brandon also at 12:30, if you want to join us for another webinar, Brandon's going to talk about Section 199A, and there will be a lot of income this year and a lot of 199A deductions, and this is a timely opportunity to talk about it. Ken Crotty will be here Saturday. You can meet him for breakfast to talk about planning for the single physician. Now that's tax and creditor protection planning. It's not a meetup group or anything like that. Sorry if you thought it was. In a not so free webinar this afternoon, Brandon and I are going to spend 60 minutes talking about what we're talking about this morning. If you want to send us questions, we'll be glad to consider addressing them this afternoon at 5 o'clock. And if you know anyone and you don't really like them that much, you could recommend that they sign up for this not so free webinar. But here is the real breaking news, and I'll take you straight there. Right to our Forbes article. The House and the Senate have passed a very nice bill. There are still going to be questions to be answered, and there's still going to be people who get rained on, but for the most part, this is very good news. And what I'm going to do first is I'm just going to take you through each of the rules one by one, 20 seconds each, as you become familiar, as we all get our land legs of going from 8 weeks to 24 weeks. And this will be a very big decision for borrowers throughout the country. Do I stay with this 8 weeks being 56 days from when I got my loan, or a little bit longer if you're going to use a 2-week or 1-week natural payroll period? Then do I fill out my application, get this thing forgiven or almost all forgiven, mostly forgiven for most people? Or do I go the whole 24 weeks, in which case I'm certainly going to have a lot more expenses to get to forgiveness, but can I keep enough staff members in my business for 24 weeks, even if things are going well today and I'm in the middle of my 8-week period? Are things going to be going well for 24 weeks of keeping enough employees on the payroll or using the December 31st amnesty date? So that is the first change and the first question. Number two, that complicated and confusing 75% test got a little bit easier to satisfy. It's now a 60% test, but it is a cliff. In other words, under the 75% test, if you didn't have at least 75% of the loan spent on payroll, health insurance, and retirement plans during those 8 weeks, then you had a limitation on how much you could deduct for the interest, the utilities, and the rent. Now it's only a 60% amount that you have to spend, but if you only spend 59%, you get no reduction at all. Now, we had more than one email from people who said that they disagree that this is a cliff. It looks like a cliff to me, and it looks like a cliff to at least one US senator who complained about it. So we think it's a cliff, and it's real important for those of you who are advisors to understand that. Number three, the amnesty date, the date when you could bring back enough workforce to avoid forgiveness, went from June 30 to December 31st. So there are going to be businesses that are not going to be able to afford to bring back the staff on December 31st. They need to budget, put enough money away so they could bring the staff back on December 31st. You can't pick June 30th or December 31st. June 30 is gone. It's part of global warming. Okay, next, and as I said, the June 30 date. Number 5, the situation where, oh my gosh, I need to rehire enough people. I can't find them. I called them. They didn't answer the phone call. They won't come back. I can't find anyone to replace them. No one wants to work right now. Oh my gosh, what do I do? Well, you read section 5, you've got a couple more exceptions now. If you honestly just can't find people to hire, and by the way, we're looking for good corporate and estate planning paralegals, and you've got my email address there at the bottom left. Let me help document that we can't find qualified people to hire. Then you will have an out. Or because of federal law, not state law, not what your doctor said, because of federal law relating to distancing, sanitation, etc., we can't bring them back because we don't have anything for them to do. That's going to be another relief. Now, there are other exceptions that the SBA has laid out very nicely in the interim rules. If you want a list of those, you can simply email me and put interim rules in the email. Number 6, it was that you had to pay this loan back to the extent it wasn't forgiven within 2 years of when you got it. Now it's 5 years. So set that money aside. Hopefully your investments will earn more than 1%, and it'll be good to repay in 5 years versus 1 year. And that includes that EIDL grant that you may have gotten of up to $100,000 that you're now going to have to repay if you got a PPP loan and had forgiveness under the PPP loan of at least the amount of the EIDL loan. And then finally, number 7, a 2-year deferral of the employer's share of payroll taxes. We now all get. It was that you couldn't take this and the PPP loan, but now you get them both. So it really is Christmas in June, I'm sorry, for a lot of small businesses. There's going to be a lot of confusion here, but mostly a tremendous amount of happiness. Back to number 1, extending the 8-week period to 24 weeks. Let me introduce the amazing Kevin Cameron. Kevin has a spreadsheet computer system that is really turning heads. What are you going to do with your spreadsheet now, Kevin, and what are you telling your clients?
What we're telling clients, Alan, is this is a gift, and we want to make sure that they still look at their original 8-week covered period. The Excel workbook is going out in version 1.7 actually today. That 1.7 is still in the 8-week format, and I want everybody to still follow that 8-week format, because if they can meet 100% forgiveness within their original 8-week covered period, that would probably still be wise for them to proceed. We are going to roll out a beta version of the 24-week plan probably by the end of today, maybe no later than say noon tomorrow. So it will be a separate workbook. If somebody already is using the 8-week workbook, they're going to be allowed to use the 24-week workbook automatically. They don't have to buy it again or anything like that. And it'll include what we interpret to be the rules for that 24-week covered period. I think the biggest challenge, Alan, is going to be the unknown. 24 weeks is a lot of time, right? It's 16 more weeks. And a lot of businesses are a little bit concerned. If you remember previously, we talked about the fact that there was nothing in the statute or the SBA guidance that said I had to keep any employees on after June 30th, right? Now we're in a situation where we probably are going to have to keep those employees on and meet these FTE requirements. So then the next question becomes, are we going to be able to get people to file sooner? Is the SBA going to let us do something sooner than 8 weeks? So we'll have to see.
Okay, very good. And Kevin, are you recommending that your clients who can get at least the vast majority of the forgiveness within 8 weeks should go ahead and file their application? or if there's only 2,000 or 3,000 more, or it's a little bit more clear to go to the 24 weeks, would you have them wait the 24 weeks?
If they can get the 100% forgiveness, Alan, I really recommend they go with the 8 weeks. I'm most concerned about the statute. That's what's got me bothered the most. And the sooner we can get that rolling and going, the better.
So again, clearly you have the choice of doing the 8 weeks based upon the previous SBA rules, but with a 60% cliff. And we will strongly recommend to our clients that they get this done in the 8 weeks, file the application, get this loan forgiven, get the certainty on their balance sheet and income statements that they don't owe this money, that there's not possibly interest accruing before rules come out, which may be harsher or unreasonable compared to what the rules are now. Brandon, any comments on this?
No, I agree with what Kevin said. I think one question that kind of stems from this is these limits on compensation per employee. Are these going to now be increased with the longer period? Does the limit on owner compensation increase with the increased period? So these, I think, are questions that would need to be addressed through SBA guidance. Presumably that these would increase so that the 850 seconds limitation to where you could only pay someone around $15,385 would now be increased to 2450 seconds of $100,000. So the limit would be somewhere around $46,154 per employee. For independent contractors, this is really great news. Presumably now their forgiveness is going to be based upon 2450 seconds of their 2019 Schedule C net income. You still have that $100,000 limit that applies, but you know the maximum loan that they could get was around the $20,833. So if this 2450 seconds rules apply, then you would presumably get full forgiveness on your application without having to really worry about the other types of expenses for independent contractors and sole proprietors. So this was a really nice change that could apply to them.
So for those of you who file a Schedule C who are not tax professionals, here's what Brandon said. Your loan amount was based upon a certain percentage of your 2019 net income from your Schedule C line 31. Your forgiveness is based upon a greater percentage of that same exact line as we read the statute. So if you filed this as an independent contractor and you did not have any employees, then there should really only be 2 boxes to check. Number 1, did you get the loan? Yes. Number 2, are you still alive and are you still in the same business? Yes. Okay, your loan is done. Now, if you're an independent contractor or a sole proprietor and you have employees, then you're going to go through a more extensive analysis. So Brandon, do you want to lead the discussion on the 60% cliff? And if there's any cliff divers here or anyone in a tall building and you don't have much payroll, this will be important to you.
Yeah, so originally the SBA came up with the so-called 75% rule, where you had to use at least 75% of the amount that counts towards forgiveness on payroll, and only 25% of that forgiveness amount could be from the non-payroll cost. Well, the way that rule worked is you just took what you spent on payroll costs, you got credit for it, you divided that amount by 0.75 to get the maximum amount that could be forgiven. So then your ratio between payroll and non-payroll costs would be equal to that 0.75, 0.25 amount. The way the statute is written now is it says that unless you use 60% of the loan amount on payroll costs, you get no forgiveness. So this reads as a cliff rule. Now, there was some discussion in the Senate yesterday. One senator expressed the disagreement with this provision and said that it is a cliff rule. She did not agree with this. Marco Rubio then, I think last week sometime, requested guidance from the Treasury and the SBA as to whether they could correct this through regulations. So we will see if the SBA might be able to issue some sort of regulation saying that this is not a cliff, but at least according to the statutory language, it appears to be a cliff as of right now. And it's unclear if the SBA would even have the authority to make a change that would not follow that language of the statute. So we'll see how this proceeds from here.
You go to another folder article.
Okay,
Yeah.
Kevin, you want to mention number 3 here, the reduction in workforce from June 30 to December 31st. Do we have any silver bullets here to get around this?
Well, Alan, I know that it's there are some benefits in the Flexibility Act that provides those additional FTE reduction exceptions. So that's good news. And remember, it does say the earlier of December 31st, earlier of your end of your 24-week period or December 31st. The original guidance said that if you get the rehire exception prior to June 30th, once you've met it, you've met it. So I believe that's going to stay the same. So if you're an employer and a borrower that does meet that rehire exception for that safe harbor, remember that rehire exception is you reduced your workforce from your February 15th date during the period February 15th to April 26th. I think that'll stick. So if you do meet that reduction, I think you can still take advantage of the safe harbor. You just have past June 30th now to accomplish that.
Yeah, I agree with you, Kevin. I think one thing to point out on this though is that according to the statute and according to the instructions in the application, you're not even eligible for this safe harbor unless you have a reduction that occurred prior to April 26th. So those borrowers that have a long period for their loan, where the loan is based upon the 24 weeks of expenses, this full-time equivalent measurement is based upon your average monthly full-time equivalent employees. So if you let go of employees after April 26, your average monthly full-time equivalency is being reduced. And as a result of that, you're going to have a reduction in your loan forgiveness, even if you bring them back to the same level as of December 30th, because of the eligibility requirements for this safe harbor. If you'll notice here in the instructions to the application, is that you are eligible for the safe harbor if both of the following conditions are met. Number one, you've had to have a reduction between February 15th and April 26th. And then two, you had to restore the deduction by not later than June 30th, which we know now is December 30th. But if you don't meet that first prong, you don't have the ability to bring them back by December 30th. So a lot of people could be in a tough position because they'll spend through their PPP monies after 10, 11, 12 weeks, however long it takes. But then they're still going to have to keep those employees on the payroll through the end of the year in order to qualify for full loan forgiveness.
I'm sorry, I accidentally muted myself. Okay, Kevin, do you understand it that way?
I do. I think that's exactly how it's going to work until the SBA gives us any further guidance on it, Alan. And that's my biggest concern about the Flexibility Act.
Right. Okay, so that's what we've talked about on page 20. Brandon, do you want to handle the rehire? Or have we lost our sound?
I'm still
I
on.
can hear you now, Alan.
Hear me.
I just dialed in on the phone.
Okay. So Brandon, do you want to talk about the rehire exception? I'm sorry we're having audio difficulties with our Go to My Webinar platform for those of you attendees. Go ahead, Brandon.
Were you able to hear the safe harbor explanation?
Yes, it was fine.
Okay. All right. So yeah, the new rehire exception, and I think Alan, you came up with a nice term for it here. Is that we tried to rehire but really couldn't exception. To qualify for this, there's two prongs to it. Number one, you have to have established the inability to rehire the employee that was on your payroll on February 15th, 2020. So first you have to reach out to them and make a written offer to them if they can come back, and then a written rejection from them, or at least some sort of documentation that they could not fill that position. And then after that prong is met, you also have to establish the inability to hire a similarly qualified employee for that position on or before December 31st. So there's two prongs there that you have to meet this first test. The other test that the SBA have came out with through regulations is if someone voluntarily resigns, if you have an employee that voluntarily requests a reduction in hours, or if you fire an employee for cause. Those are also all exceptions to this full-time equivalent count. So you can rely upon those as well. And the other thing to mention here is that if you do have someone that you're not able to rehire and you actually replace them with someone, you don't have to replace them in that same position. So you can replace a manager with a line working employee. There's no prohibition against that as long as that would get you back to your same level of full-time equivalent employees. The SBA has clarified that through regulations for us as well. But if you aren't unable to hire someone, it has to be it only has to be a similarly qualified employee. You don't have to accept position from someone that is not qualified for the position just to meet the safe harbor.
Right. And it's interesting that when you offer employment to employees who won't come back, it needs to be documented in writing. You need to keep really good records. I think an email where the employee emails back and says, I can't come back. I'm sorry. I'm taking care of my children. I can't come back. I'm sorry. My doctor says I can't come back. Now, when the doctor says I can't come back because I am susceptible to the COVID virus or being really badly hurt if I get the COVID virus, the next question becomes, should you make reasonable accommodations for that employee so that they can work from home or even maybe from a remote workplace that you could furnish for them? And on that question, this was not addressed by the new legislation, but it's going to be a difficulty. A lot of you attending this already know about the Americans with Disabilities Act, and the Americans with Disabilities Act has not been set aside or waived for anyone. Yesterday, Colleen Flynn and I did a 1-hour webinar on all the employment law implications of this situation, and we're going to send a link so that everyone watching this can see what Colleen had to say. She started about 12 minutes into the presentation, but it was very educational. And quite frankly, it's very risky to bring employees back, because if you bring them back and other employees in your business are not following the guidelines and that employee gets the virus and gets terribly injured and sues you, you may not have the advantage of workers' compensation if your business was considered to be breaking the rules. So don't ignore these rules about distancing, about wearing masks, about sanitariness. If your employees decide to skip these rules and one employee has a problem, then your whole business is going to have a problem. And this will probably bring some small businesses down and will allow some plaintiff lawyers to make a good living. Brandon, do you want to talk about these federal requirements that may also provide an ability to not have to bring people back?
So this is the second exception provided by this new legislation passed by Congress, and it basically says that if you're unable to return to your normal level of activity that you were pre-virus, and because of that you're not able to have the same number of employees, or it wouldn't be efficient to have the same number of employees, or maybe even the requirements don't allow you to have that number of employees because of social distancing guidelines, you're not going to be penalized for this. Now, these do have to be guidance issued by specific agencies, with the HHS, whether it's the CDC or OSHA, or some federally mandated guideline that would require you to have social distancing measures or workplace requirements. Well, you can use the example of like a hair salon that's not able to be back in business because of a shutdown order. They obviously cannot bring their employees back, so they would not be penalized for not having the same level of full-time equivalent employees due to those restrictions. Another example would be restaurants operating at half capacity. If now they only would have half of their employees back because they're not at full capacity, I don't think that they would be penalized for not having that same level of full-time equivalency.
Now, it's a pretty broad standard, so we could use some guidance from the SBA on how this would you know, work officially, and whether there would be a bright line test for this, or if it's just you know, just this standard would be all that we would get. But some guidance would be helpful on this provision.
Kevin, do you want to say anything about the 5-year term and also the 2-year deferral? And then when you're done, I think we'll go to a couple of the slides that talk about your spreadsheet. So if the CPAs in the audience, you know, may have an interest in hearing you talk about that for a couple minutes.
Sure, I'll be real quick on these 2 other items. The 5-year term is just an extension from the original 2-year term for the loan. The benefit there is it's a 1% loan interest. So why not go the 5 years? That's going to be a great windfall for businesses that can't achieve 100% loan forgiveness. Again, pointing out that this crazy statute of limitations, that 6-year look back, is still the later of the loan forgiveness date or the date the loan is paid off. So if you decide to go out 5 years, you're looking at 11 years that the SBA has to come back and look at your original loan application, your forgiveness application, and underlying data. So that's a long time to have to keep that information going for that long. The other issue, Alan, which I think is a gift, is some employers are currently deferring their FICA tax, the employer FICA tax. And the original guidance was that once the loan was forgiven, you could no longer defer that tax. That deferral is till December 31st. We now know that the new law, the Flexibility Act, is going to allow employers to continue to defer that tax up until the end of the year, whether the loan is forgiven or not. So that's a nice gift, especially given the fact that the employer FICA tax is not part of the loan forgiveness. A lot of people think it is, and it's not. So if you've got an employer or borrower, a client, whatever, that is having a lot of cash flow issues, deferring that's probably a great idea. It's an interest-free deferral, but let's not forget what we're going to owe that money, and there could be some stiff penalties for not paying it when it's due, which is at the end of 2021, at the end of 2022, long time down the road.
Right, right. Okay, and let me mention, first of all, President Trump has not signed this bill, but we certainly believe he will. And there are going to be issues above and beyond what we've discussed, as sure as day. The SBA has a lot of regulations, for example, which say you can't deduct more than $15,000 for workers, but they meant that 850 seconds of 100,000. So they're going to have to update that. They're going to have to decide how the cliff works. They're going to have to decide how the reporting works. And we're going to keep everyone posted with Forbes articles, LISI articles, webinars, etc. And if you have questions, please let us know. Let me now explain, and this is mostly for the accountants and lawyers in the group, and we're going to go a little bit over the 30 minutes. So those of you who have joined us, again, thanks so much. You've got our email addresses. Let us know what more we can do for you. But for the accountants, and maybe for some of the attendees, there is a 4-minute summary video that talks you through all the numbers and all the formulas and all the issues, how Kevin's spreadsheet works. There's a 60-minute walkthrough video. It's actually, I think, 68 minutes now, how his spreadsheet works. And whether you're going to use Kevin's spreadsheet or the AICPA spreadsheet or any other one, he does his spreadsheet does a really nice job. Brandon, do we have some of his spreadsheet pages here? I thought we did. Oh, there we go. Kevin, you want to take this?
Sure, Alan. The spreadsheet is still good for the 8-week period, although I mentioned earlier we got version 1.7 coming out today. It was actually ready yesterday. We kind of wanted to hold off on sending it out to see if the Senate would pass this bill. We thought they would pass some kind of compromise, and to our surprise, they didn't. So you can still use this spreadsheet, but version 1.7 is going to add the pay reduction calculations so that a employer or a borrower can actually calculate the pay reductions if they reduce anybody's pay by more than 25%. Remember, that's the effective pay rate, hourly or salary. So that's coming out. And then as an added benefit for accountants and CPAs and attorneys, we've added a really neat report letter that is the last tab of the worksheet that summarizes the entire workbook into one letter. It's about a 4-page letter that you can print from Excel, or you can print directly to or copy to Word and customize even further. So that's mainly for CPAs, enrolled agents, and attorneys that are actually using the worksheet for their clients. But it's also a really good report for somebody to run because it summarizes the entire process in a letter format, and it's very explanatory, has good information in it, so that's helpful. So that spreadsheet's still good. We're still all good to use it. The new version, which we're going to beta at least by tomorrow, will cover the 24-week period. We don't have any guidance on this yet, everybody. So what you're going to get is just a what if, what we think it's going to be, such as the 24/50 seconds measurement now that they mentioned earlier. So that'll be out by tomorrow. We've decided to do it in 2 separate formats just because trying to put it into one would just be a little overwhelming and get that spreadsheet a little bit out of control.
Okay, very good. Well, we really appreciate all of the attendees. Please tell your friends, your neighbors, your colleagues, even your mother-in-law about this webinar. We will be sending everybody who has attended a link so that they can review this again. I think we'll probably do another one tomorrow. It'll just be pretty much like this one. I hope you have a fantastic day. Brandon, Kevin, any final words?
My final words, Alan, are the same that I've been saying all along, and that is document, document, document everything you do with respect to this. The more, the better.
Absolutely. Brandon?
I agree with Kevin. I think that's very important, and hopefully, we'll get some clarification here from the SBA soon, so everyone can be know what's going on and be ready to apply for forgiveness at the end of the 8 weeks if they want, and then if not, they'll have 24 weeks to spend all the money and hopefully achieve full forgiveness.
Right. I'll mention that the loan had to be necessary to support the ongoing operations of the business. If it was not considered to be necessary to support the ongoing operations of the business, then there could be issues and, of course, full repayment obligations. If you're not sure of anything whatsoever, or even if you're absolutely sure of everything, you should be working with a competent CPA or some financial advisor to make sure that this is done right. You're signing documents under penalties of perjury. There's a lot of money involved. Please do the right thing for everyone involved, including yourself, and have a fantastic day. Thank you.